asking Rory, how big is the barrel of oil impact on the market in a historical context? Quote, "It's bigger than anything in history. Every analyst I speak with, people that I respect, people that are not alarmists, people that make fun of the alarmists, they are all terrified." End quote.
Welcome back to another episode of The Weekly for Monday, March 23rd here in Asia. Still Sunday evening in the West. Markets haven't opened yet. We're going to start things off as we have been doing so far for the last several weeks since the outbreak of conflict, war in the Middle East, with a recap of the situation that we've been monitoring, David. So you wrote a lot about this. You wrote a lot about this in your newsletter. Another great recap. Let's take people through some of the major updates on the war situation for last week before we get into the market impact.
Yeah, totally. Okay, so I opened up my newsletter with this quote from the Speaker of the Islamic Republic of Iran's parliament. This is not the full quote, but I thought it kind of has the biggest impact here. "An eye for an eye equation is in effect, and a new level of confrontation has begun." And boy, that is absolutely what has happened and what we are on the cusp of, like further escalation. This was posted by Mohammed Bagar Ghalibarf. Sorry, I'm terrible with this.
Ghalibarf.
Dude, whatever, man. This gentleman posted this on March 19th after the strikes on Iran's South Pars gas field. Iran immediately delivered on this threat, promise, eye for an eye, kind of new way of interpreting the conflict. They had retaliatory strikes on Qatar's Ras Laffan industrial city, which, according to some, produces roughly 20% of global LNG supply. And I believe Qatar Energy and several of the contractors for that complex have said that the damage already done just in that retaliatory strike is going to take 2 to 5 years to repair. So the damage is now in years in terms of the worldwide LNG output. President Trump, immediately after Iran's retaliatory attack, he kind of waded in to try and de-escalate the situation. It was a wild post. He's had some wild ones, but I mean, I feel like they're getting wilder and wilder. He said, kind of publicly admonished Israel, then Iran, and then he said, if Iran does it anymore, we're gonna do kind of scorched earth thing. All right. Following all this stuff, it did really feel like for the first time last week, markets, specifically equity markets, have realized that imminent taco is unlikely. You've seen markets fall through the end of the week. Bob Elliott and others, for example, what's his name? Rory Johnston. They had been surprised equity markets had remained high, and even surprised that they didn't fall more. This is to say, the markets are still not pricing in fully what has already happened. Okay. So I want to quote from the excellent podcast Monetary Matters with Jack Farley. He had Rory Johnston on, and I've been following Rory Johnston since COVID, when there was, I don't know if anyone recalls this, but there was also kind of an energy shock then, right? You saw the crude oil go to negative $35 a barrel, if you remember that. It's pretty interesting. And then in the start of the Russia-Ukraine outbreak, there was a energy shock. I put that in quotation marks because lots of like oil commodity tourists said the sky was falling and all this kind of stuff. But level-headed people like Rory Johnston, they said no, this is BS, and he was right. And he was right for the right reasons. Anyway, I say all that to give this quote from the Monetary Matters podcast with Rory Johnston. And I quote, It's bigger than asking Rory, how big is the barrel of oil impact on the market in a historical context? Quote, it's bigger than anything in history. Every analyst I speak with, people that I respect, people that are not alarmists, people that make fun of the alarmists, they are all terrified, end quote. Again, this is not to say the sky is falling or the world is ending or anything like that, but in my estimation, the level-headed people who have made oil, and specifically oil, their kind of their career, and have been level-headed in the past 6 years through COVID, through Russia, Ukraine. Now this time they're starting to get worried. So I think that's, to me, a sign of where we are and kind of what's to come. This brings
they're terrified. I think.
Yes.
Not starting to get worried. Terrified.
Yes. So, all right. This brings us to today, or this brings us to the weekend. This past weekend, which is, again, going back to Trump. He released this ultimatum to Iran. Graham, do you want to read this?
If Iran doesn't fully open without threat the Strait of Hormuz within 48 hours from this exact point in time, the United States of America will hit and obliterate their various power plants, starting with the biggest ones first. Thank you for attention to this matter, President Donald J. Trump.
Holy
and that was posted
24 hours ago.
About 24 hours ago. So the clock is ticking.
So by this time tomorrow, I mean, it's going to be a very, very, very important event. Now, okay. Trump releases this ultimatum, and the previously mentioned gentleman from the Iranian parliament who said that eye for an eye quote, and then Iran followed through with the retaliatory eye for an eye attack. He replied to Trump's ultimatum. Immediately after the power plants and infrastructure in our country are targeted, the critical infrastructure, energy infrastructure, and oil facilities throughout the region will be considered legitimate targets and will be destroyed in an irreversible manner, and the price of oil will remain high for a long time. And throw down what is your right hand, it will swallow up what they have made. Okay, so there we have it. Then Iran released a list. They released a list of addresses for the facilities that they will target. This apparently has been verified, right? This is not just some like random person's list. So you know, we don't have to go through this whole list, but I mean, these are civilian related infrastructure. These are not military targets whatsoever, right?
Desalination plants.
Yes, right. Like, so the first one, I'm not going to say it. Desalination plant, largest in the world. Next one, Southern Saudi grid electricity power plant, gone. Qatar grid hit. Another power plant plus water thing. Another desalination plant. Another power plant. Another power plus water plant. Another power plant. Another grid power plant in Jordan. Another power plant. I mean, 12 named facilities, 6 countries, 0 military bases on the list, all civilian infrastructure for power and water. So, I mean, this is now eye for an eye, and just I don't know. So that's where we are today, Graham. On Sunday night Eastern Standard Time, U.S. Here we are in Japan. I'm in Japan. And the Asian markets have opened up. This is going to help us give a preview of what's likely to happen for U.S. equities on market open. And thus far, it's been about a 4% gap down from Friday.
You're talking about equities, Nikkei?
Yes, I'm talking about the Nikkei. The Nikkei gaps down, and it went as low as like 5%, and it's kind of pulled back between 3.5 and 4%. Gap down in the market. That's probably, I think that's a pretty decent estimation of what will happen on U.S. Open. Is like a 4 to 5% gap down.
Yeah, and just looking at the U.S. equities, right? I've got the chart up right now. It's very much looking like a rolling over situation. We're at the that critical 200-day moving average. I think the current price of the current index is up where it was in September, and not looking good, right? There's a significant space, a gap that the markets can trace down to.
Yes, and again, the thing that I'm going to be looking for is, okay, so it's about what, 10:20 right now, Eastern Standard Time. So I guess the ultimatum, that's when it is around 10 p.m. tomorrow. I mean, that's what I'm going to be glued to, is just what's going to happen at 10 p.m. America time tomorrow, right? Like, it's crazy that so much rides on that, you know? And anyway, that's where we are.
Okay, well, yeah. So if you look at the Brent crude WTI, it's around $100 right now. And meanwhile, the Asian markets, cash settled crude prices are more like 170. So one indicator, cash Dubai crude, is refers to physical oil pricing. It's a physical oil pricing benchmark used in global energy markets, specifically for Middle Eastern crude sold to Asia, at $170 right now. So people in Asia are paying that much for crude oil. This is the highest ever price seen.
Yeah, I write about this in the newsletter as well, which is there's an interesting thing that happened. The Asian refiners, they were biding their time until about, I guess, Wednesday or Thursday of last week, when they started running out of oil to refine. They hadn't fully run out, but they were starting to run out. And so they started sourcing barrels outside of the Middle East, right? Now, again, a lot of these Asian countries, not all of them, but like Japan and China, they have a lot of money. And so they can go out into the world markets and start bidding up oil other places, right? And that's why you saw that happen. And again, it'll trickle out everywhere because they can go out and buy oil by just paying more money.
But some places can't. And I saw that Laos, for example, just said that they've issued. They've said all schools are now to be only 3 days a week. Yep. This is because of their inability to source oil. They don't have the purchasing power that the bigger economies do. So some economies already putting restrictions on oil consumption, basically.
Definitely. This is the newsletter. I talked about how 2 major airlines have each canceled 1,000+ flights for April. And these are all, the flights that were canceled were all the flights that had a leg in Asia. And the reason that the flights were canceled is because the airlines were not confident that those Asian countries could refuel their jets, their airplanes, and so their airplanes would be stuck there. And so for the month of April alone, already 2 airlines have canceled 1,000+ flights each. I have to imagine this will spread everywhere, even major countries like Japan and China. They're just going to start having to reduce it from a pragmatic level. And just for everybody listening, jet fuel is kind of the most, it is the most expensive large volume product from crude oil. It's considered the highest level of, I guess you would say, like burnable fuel. And so it is, the reason that it's so expensive is that it's harder to produce and there's less of it produced. So obviously it'll have a faster impact on scarcity, right? Because it's already, there's not a lot of it already. So you could imagine like airlines being kind of a canary in the coal mine in terms of things that are going to start being canceled or reduced first.
Yep. All right. Let's talk about treasuries for a moment, because this is another major component of this, I believe. 10-year bond prices have been spiking since the start of the outbreak of conflict, up from just under 4% at the start of the conflict to now nearly 4.4%. So I think a 45 basis point increase in the 10-year Treasury bond yield. Some people are saying that this could be more important, at least for the U.S.'s strategic involvement in this conflict than the price of oil from the U.S.'s perspective, because it has such a high debt. When these yields go up, that increases the debt servicing cost, and that is the real threat for the U.S., the thing that might, I don't know, dictate how they react in the coming days.
Yeah, I mean, I think there's two camps on this. In the crypto dollar debasement, I hate America fiat world, the people look at this and they point to it and they say, see, world, the fiat system, the U.S. debt thing it's blowing up. A lot of the people that I follow, though, like Bob Elliott, who I think maybe I mentioned earlier, they're like, no, this is completely normal, right? Like, what usually happens in these kinds of things is bond yields will spike, and then at a certain point, the yields are attractive enough where they become people start buying the heck out of them. And so,
yeah, especially as other markets sell off, right? People are looking for a safe haven, and okay, the dollar is strengthening, and it offers higher yield. So naturally, that's where you would put it. And so you're saying that would counteract the yield.
Yeah, and they say yield. Yeah. So like, and again, these are like, I think, really intelligent people. You have like Bob Elliott there, Brent Johnson, Dollar Milkshake guy, he says it, but also Michael Green, right, of Simplify. The again, all really, really smart people, and I think their basic idea, though, is to counter a lot of these doomer things, is like the U.S. having higher yields on their bonds. As the yield goes up, it then becomes attractive, and it will be bought like en masse, right? And so a lot of these folks are waiting for that, right? That's what they're waiting for. And I think Bob Elliott said in a podcast last week, he was like, yeah, once the 10-year, I think it was the 10-year, once the 10-year gets to about 5%, that's kind of where I think it could go. I think that's when we'll start kind of piling into bonds. So again, it's kind of it's not a bug, it's a feature. It's not a problem. It's kind of what it should happen in a way. But again, I'm not exactly sure. I'm just repeating what others have said on that.
Okay. So Bitcoin down from a high of almost 75,000 about a week ago, down to now below 68, just below 68,000. Reacting over the weekend, more like risk off, or tech beta, I guess is the way it's reacting right now. Gold and silver have had historic sell-offs over the last week, especially the last few days. Gold briefly spiked to $4,500 at the outbreak of conflict. Sorry, $5,500 at the outbreak of conflict. Now down to below or around 4,500. So that's almost 4,400 now. So we're talking 20% drop from the most recent peak.
It's like what I saw a post. Was that like $1.5 trillion or something like that?
I think it's quite a bit more than that, because the gold market cap is like 30 or 40 trillion, and so we're talking like 10 trillion or something.
So it's like what, 5 times the crypto or
the entire crypto market cap.
Nice.
So historic moves happening in gold and silver. Silver obviously kind of acting like beta to gold, selling off even more, down to I think $60 or just above $60, somewhere between 60 and 70. So
I'd like to point out this Citrini post. So shout out to Citrini. He I mean, he didn't nail it exactly, but again, it was a great post. And I think I'll always remember this aphorism because it kind of perfectly encapsulates something that you and I have said on podcasts ever since COVID when I saw this in COVID, right? Which is where is the post? Oh, here it is.
Quote, when people are worried about the future, they buy gold. When people are worried about the present, they sell gold.
Boom. Perfect. I mean, that is exactly, it's so good to hear someone say what I've been bumbling saying for years. It's like, this is it. This is exactly it captures it. And we saw it in COVID, right? You saw it during that crazy COVID shock. Was that March 11th? And we're kind of seeing it now, I think. And
I think, Bitcoin probably follows a very similar pattern to that as well.
Yeah. If not way more pronounced, right?
Yeah. All right. Maybe one more thing to talk about is the growing narrative around the yuan, the Petro yuan, potentially replacing the Petro dollar. Iran giving clearance to countries to send oil through the straits as long as they're not, like, strictly speaking, U.S. aligned, I guess, and also as long as they settle in not the dollar, i.e. then the yuan. Now, David, this narrative is certainly growing, but I believe you're a fader of this narrative in the long term. Wondering if you could explain why.
Well, again, I mean, I sound like a broken record, and it's just like I saw this narrative kind of bubble up out of X, or maybe from, like, I don't know, Thursday. And it was just thinking the whole time, like, man, this is weak sauce, right? Like, I don't know if you remember, this Yuan talk has been going specifically for much of 2025. And back then it was a lot more vocal and aggressive, and more people believed it. This latest one seems so pathetic and impotent. I was just like, yeah, obviously, it almost feels like the people who saying it, they don't really even believe it, because there didn't seem to be any kind of energy behind it. But in any case, the basic idea is simple on this, and it's so laughable and I think pathetic here. Petro yuan, right? So what does that mean? It means that China gets in a very basic sense. It means China is able to secure and direct oil around the world, right? Isn't that what it basically means? Like, the petrodollar basically comes down to the fact that the U.S. controls or guarantees the flow of oil around the world, right? Isn't that what that is? Because it's not just what something is settled in. There's more, I think, a fundamental thing about it. It's like a matter of security, right? You are able to control, or control more than anyone else, the flow of oil, and thus you get the privilege of having it settled in your currency. I believe that's kind of how I read the petrodollar. Does anyone think that the yuan that China has is anything but absolutely screwed by this current incident? I haven't seen a single credible person say, you know what, China's going to come out of this better than anyone else, right? The Strait of Hormuz thing, this conflict in the Middle East. Nobody. I haven't heard anyone say anything positive. I mean, seriously, have you, Graham? I'd love to read it, honestly.
Well, honestly, I've seen convincing arguments on X for all sides of the equation.
No, but have you?
I struggle to. There's so much propaganda out there.
Yeah.
It's really hard to tell, like, what's real right now.
But has there been any? So I have seen things like this Petro yuan thing, but all you have to do is just then look one layer down. Have you seen anything from anyone? And I'm talking about, like, even like dollar and U.S. haters like Luke Roman. Have they said anything about how China is able to secure the oil or anything like that? Like, this incident shows that China is actually stronger in their oil security. It's laughable, right? Like, I mean, seriously, has anyone said anything like that? Because they're, like, so inept. They're so impotent, China, in this incident. They have no physical, like, in the world can do something about their oil shortage. Japan is way more secure, and obviously they're not that secure in Asia. Japan is the most secure because they actually have a blue water navy. They can send ships over there and do something. They can actually do something over there. China has nothing. They have nothing. So again, this Petro Yuan thing is just like, it's so, I don't know. I just find it laughable. Now, again, so that's on a basic level. And then the higher level thing is, okay, maybe they're going to pay in yuan. But just like with the BRICS stuff and all these things for the past 5 years, here's what you want to look for, Graham. You have a headline, a redacted headline that says, this is going to be settled in yuan. And then 2 months later, everyone's moved on, and they're like, "Yeah, look, see, the world's ending. It's dollar's done." And then you actually read the trade statements of what that are eventually released. Like 5% or 10% of the oil exchange was done in yuan, right? Or even in the chance that where the whole deal is done in yuan, or in like what's it called, rupees, Indian rupees, ruple, whatever the heck it is. It was priced in dollars. It was not priced, right? So who cares?
It's just a medium,
you know,
it's just a narrative that people are trying to push.
Yeah, I think that's just me, and whatever. I could be very wrong on this, but this to me is a worse narrative than the BRICS for this kind of thing. Like again, anyway. Sorry, I went on a rant there.
All right, so yeah, we've gone through all of the Iran updates and immediate or the big picture macro stuff. Yeah, we are a Bitcoin and crypto podcast here, so let's talk about AI.
That's very important for crypto.
Yeah, so there's been some developments, I guess, in the BitTensor world. You've had some pretty high profile shilling, I guess you could call it. Let's see what's going on here. 2 weeks ago, Jason Calacanis of the All In podcast ran a dedicated episode on This Week in Startups to cover BitTensor, Tau. And it highlights the impending need to list subnet tokens on mainstream exchanges like Robinhood. Then we have All In podcast co-host Chamath Palihapitiya shilling BitTensor's subnet 3, aka Templar.
Suspicious.
While sitting right next to NVIDIA CEO Jensen Huang on the All In podcast. And this, as you noted, David, sent Tau holders into a frenzy. Anything else to add on this story?
Okay, well, first of all, my knee-jerk reaction to this is, oh no. I don't know if you felt that. Because I don't know about you, Graham. This is a slight side tangent in another rant. I apologize to everybody. But when I got into crypto, when I first got into crypto, and then you're bright-eyed and idealistic, and then you realize everything is a scam and everyone's shilling their bags and everyone was just waiting for exit liquidity in crypto. You see that because it's so blatant and in your face in crypto, right? And then as you kind of learn more about how all these kind of basic structures work, you look at CNBC and CNN and you see like BlackRock CEO get on there or Goldman Sachs CEO get on there and he's talking about, this is a really good investment. And then you see like the next day they sell everything that they just shilled and you're like, wait a second, they're doing exactly what these pathetic, lame crypto scammers are doing, you know?
Yeah.
And then you kind of see it everywhere. You see it everywhere. And so like in crypto, I have a rule of thumb. I don't know, you probably have the same thing, is when I listen to a podcast with anybody, it could be people I respect or people I have never heard of, and they shill something, they talk about something, I immediately assume it's like a hard shill, exit liquidity, trying to get out of a position kind of deal, you know? I think it's usually the case, right? Like I think we joked about it on Token Narratives, the Lighter founder / CEO who appeared on every podcast I have ever listened to multiple times in like 2 months. It was like, interesting. Wonder what's going on there. So then when I see these All In people last week, Jason, suddenly randomly start talking about BitTensor, I'm like, oh, okay. And then the next week, this guy do it too? I'm just like, oh, hell no. Oh, God, please no. Because I like BitTensor. But like, I mean, come on. This scares the hell out of me. What do you think?
Yeah. No, definitely. I'm in the same camp as you. You can't trust anyone on a podcast, especially high profile people. You can of course trust the Weekly with Bitcoin.com because we're not movers and shakers in the markets.
We're poor.
So
We're poor mouth breathers.
all right.
No, but hold on. But here's the problem that I'm torn between, which is I think BitTensor is a good, maybe the best AI crypto project right now. And full disclosure, I have zero BitTensor. I haven't bought any yet. But when I heard that Jason did that last week, I was like, oh man, maybe it's too late. And then when this guy did it this week, I'm like, no, I'm really too late. Like, should I buy it now? Like, seriously, I was thinking like, wow, I don't know. So now I'm probably not going to buy Tau.
Yeah, I mean, maybe it's a momentum play, right? Like, these people are shilling it, so you can get in and get out real quick. Because as you noted, David, when they do their exit liquidity shills, I think the pattern tends to be that it doesn't dump right away. It goes up another like 10, 20%, and then it dumps. And so you might be able to get that 10, 20%.
Yeah. So I mean, I was kind of kicking myself because you and I and Alex have been off camera talking about BitTensor for I think like a month or more, and I didn't buy any the whole time. I was like, oh, I'm going to wait because the markets are like so risky right now. And then yeah. I mean, so again, it was great to see, I guess, mainstreamish people talking about it, but then it just scares the hell out of me. So I think I'm staying away for the time being.
All right, let's quickly cover two more stories for the week here. One is related to the AI space. So Visa Crypto Labs has introduced Visa CLI, Visa Command Line Interface, and it's a tool designed to let AI agents execute payments directly from the terminal, eliminating the clunky handoff between code and checkout pages. So the system, again, it's in beta, does allow bots, scripts, and automated workflows to pay for services without human intervention. And it uses tokenized Visa credentials embedded within a new machine payments protocol, MPP. So instead of juggling API keys or pre-funded wallets, agents can request a service, authorize payment in line, and receive delivery in a single interaction. So yeah, I think the reason for highlighting this is just further sort of data point that the TradFi rail infrastructure are also, like everyone, trying to find ways to play along with the AI narrative.
Yeah, I mean, this seems like a alternative to the X40, is it 402?
Yeah, and MasterCard also released something very similar to this a couple of weeks ago. Basically they're just trying to make their infrastructure available to AI agents. And I don't know, like we've been talking about AI agents for over a year, and in the crypto space, the consensus is that they will of course use crypto. But MasterCard and Visa also have a say here. So I just find this quite interesting. They're not rolling over, right? They're doing what they can to make their infrastructure available to the machines.
Yeah. But also the thing, like I think I mentioned a couple of weeks ago, Flood, the X account hyperliquid guy. He talked about how there was a TradFi alternative wiring service that was settled, within hours or something like that. And he was like, "Oh, this is awesome. It's so useful. I don't have to wait T plus 2 days or whatever to send decent amounts of money." And then he looked into the guts of the system, and it was just a TradFi rail on one side, or a company on one side in one country, TradFi company in another country, and then USDC rails, right?
Yeah.
So nothing. What I'm saying is, like, these Visa and MasterCard, I don't know what the back end is going to look like, but they could just settle. They could just use the same kind of thing where it's like their infrastructure on either end, and then just the thing that transmits could just be crypto, right?
Yeah. And actually, that sounds like a very similar setup to our last story of the week, which is the SEC greenlighting approval, giving approval for NASDAQ's long-awaited rule change. And this allows tokenized versions of stocks and ETFs to trade alongside traditional shares on the exchange. So this was a proposal first filed in September of last year by NASDAQ and refined over the last few months through multiple amendments. And yeah, basically it enables certain approved market participants to trade blockchain-based representations of securities. Again, it's under a pilot and it's tied to the Depository Trust Company. So tokenized securities will trade on the same order book as their conventional counterparts. They share identical execution, priority, pricing, and trading symbols. And so basically, yeah, it's like just using crypto infrastructure in the background for a certain part of the process. So that's why I said it's kind of similar to what probably what's happening with MasterCard and Visa.
Yeah. I was at the off-chain event in Tokyo last week. I was talking with a gentleman from Franklin Templeton, who's kind of, I forgot what special situations, I think is what his department he was in. Anyway, I really would like to get someone on here or interview Graham about like this RWA kind of stuff, because like this is like an RWA, like a stock, right? Like it's a tokenized stock. RWA could be stable coins is the one we have now. Could be treasuries, could be real estate, could be stocks, could be money market funds. That's what this guy from Franklin Templeton was working on. And I was asking him all these questions of like, okay, I understand it in principle, and I understand that at the very least you'll get like faster settlement, right? Near instant settlement and all these kinds of guarantees. But I was like, but how does it work? Like, it's not composable, right? It can't be composable. Wallet, I can't put it in it has to be like some kind of like special walled garden wallet. And the only people I can send it to are on like whitelists, and you know what I'm talking about? And so,
exactly. So they're just using like permissioned infrastructure in the background and maybe, exactly.
Yeah. I want to be able to take my stock, for example, and then deposit it into an Aave thing, like an Aave whatever, and like take a small loan, like use it as collateral, this kind of thing. That'd be awesome.
Yeah, that's not what's happening here.
Exactly. Yeah.
All right, David, that wraps it up for the week. Thanks as usual for your insights, and everyone stay safe. Keep your eyes
24
on the market.
hours.
Got
24
less
hours.
than 24 hours to see how the Trump's ultimatum unfolds.
Oh my God.
All right. Have a great week.